Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Paddington Zinzombe. This lesson is brought to you by the Gauteng Department of Education in collaboration with Sci-Bono Discovery Center. Today we are going to look into budgeting, and we are going to try and break down this into two parts. The objectives of today's lesson are to understand the different types of budgets. And then we are also going to look into the completion of the debtors collection schedule, followed by the completion of the creditors payment schedule. And then we are going to look into the cash budget and how we can be in a position to complete situations in which we are given an incomplete cash budget. To start with, let's go through budget concepts. Now, the first thing that I'm bringing to you is, what is this cash budget? Now, a cash budget deals with expected inflows of cash as well as the outflows of cash. It's a forecast of cash receipts and cash payments. And please take note and underline here, we are dealing with cash. And then, what is the purpose of this cash budget? It is to project or to estimate the future receipts and payments. That is for planning purposes. What are our expected receipts and what are we expecting to make as payments? Now, it's also to indicate a possible cash shortage in time so that we can arrange to bridge the finance gap. Now, so in other words, a cash budget tells us in July we might experience a shortage of cash so that we can plan what to do when July comes. Or it might say in September we are going to have a surplus of cash. Remember, cash is always on the move. So we plan also what is it that we are going to do with the excess cash that we are going to have. And then the next thing that is closely linked to the cash budget is a projected income statement. Now, these two, a cash budget and a projected income statement, looks into the future. So they are for planning purposes. They are different from our cash flow statement and our income statement, which looks into what happened in the past. Now, a projected income statement, it's a budget that deals with expected receipts and payments. Check here, they say inflow and outflow of cash. These are supposed to be the expenses as well as the incomes of a business. Now, what is the purpose of our projected income statement? We want to try and estimate our future profits and losses. So we are preparing the same income statement that you've got income and expenses, but projecting into the future and checking what might be our expected profits as well as losses in future. Now, let's move on to our debtors collection schedule. Now, this is used to calculate the expected collection of money from debtors when goods have been sold on credit. Remember, whenever we are having a debtor, it means we are selling goods on credit. Now, that is delivering goods today and expecting a payment in future. Now, what is the problem with this? Not everyone who is promising to pay tomorrow will pay tomorrow. Not everyone who is promising to pay next month will pay next month. And it is because of that, we look into our history and check. When clients are saying they are going to pay, usually what is their paying pattern? And we use that pattern to be in a position to check and project what might be our receipts from debtors in months following. So the purpose of a projected of the debtors collection schedule is to estimate the receipts that are expected from our debtors. Because if we miss that part to say how much are we expecting to get from our debtors, then we might not be able to budget our cash correctly. Now, on the flip side, we are having a creditor's payment schedule. Now, this is a plan of how the business intends to pay its creditors. Remember, as a business, we are not going at any time to say we are not paying our creditors on time. So the trick is to go to our creditors, sit them down, and negotiate for a suitable payment period for us so that we can be in a position to pay within the agreed timeframes. So the purpose of our creditors' payment schedule is to estimate the payments that we are expected to make to our creditors in months following. So now we know how much to expect from our debtors. We know how much we are going to be able to pay to our creditors. Then put together, we can think of our budget. Now, a budget provides management with an effective tool to monitor and control business activities for internal control measurement purposes. Without a budget, you are just going into the future not knowing what to expect. But the budget gives management a tool that helps them to monitor the future. They can be in a position to know what to expect in future and deal with it accordingly. Now, budgets are used by management to ensure the following: that future plans are followed. So we don't just put in a budget there so that we decorate our offices, but we are saying now this is the plan of action. So when we are getting into the future, we know the correct path to follow. Now, markup percentage has been maintained. We want to make sure that we maintain the markup percentage that the business has set for itself. It's no use to say we are going to effectively have a 50% markup, but when we get to actual, we can see that we only had a 30% markup. It means we are going to be having a shortfall when it comes to the gross profit. It also ensures that sales targets have been achieved. So we are going to check how much are we going to budget to advertise and how much are we going to expect as sales so that all can be in line with what we are looking for as a business. It also ensures that expenditure is well controlled. And then lastly, the cash flow challenges are avoided. When we know we are going to have a challenge, then we can be in a position to avoid it. And then future targets and objectives that the business has set itself for have been achieved. Now, having looked into these concepts, now let's look into activities and see how do we apply them into questions when asked in the exam. So our first activities is looking into a debtors collection schedule. It says here you are provided with information relating to us transporting equipment. Now, you are required to do these three things. Explain the purpose, the importance, of comparing budgeted figures with actual figures achieved for the same period. Mention just one point. Now, they are just saying here, at the end of the period, we had budgeted to spend so much, but in actual effect, we might spend something different from what we had budgeted. Why should we now go on to compare budget versus actual? The second question says, prepare the debtors collection schedule for September 2021. And then lastly, determine the amount of bad debts written off that will appear in the projected income statement in September 2021. Now, the information that is given to us is as follows. It says something to do with sales and debtors collections. They are saying to start with, 75% of all sales are on credit and the rest cash. Just here. The minute you get to this point, they're saying the rest is cash. So sales can either be credit or cash. 100%. Now, if 75% is credit, what percentage is cash? Now, we are going to start here. 25% of our sales are going to be cash. And then, the business uses a markup of 60% on cost. Now, why do we have this brought to our attention? Please take note. When dealing with this topic, you are going to see that they are going to tell you that the business is using a fixed stock base, which means opening stock and closing stock are always expected to be the same. Now, what does that mean? It simply means cost of sales is equal to purchases. So, remember markup, we usually use it to calculate our cost of sales. So if they are saying cost of sales is equal to purchases, then it means we can still use our markup to calculate our purchases. You'll see it as we go through this. And then debtors are expected to pay as follows. So remember, we said from the history, it taught us what to expect when dealing with our debtors. When they are saying tomorrow, we don't have to expect all the money tomorrow because history have taught us differently. So what is it that we have learned? We have learned that 25% of our debtors is paid in the same month of sale. So it means you sell in January, you are only going to expect 25% of that amount in the month of January, which means 75% of our credit sales are not paid in the month of sale. It will come. And then it also goes to say 40% is paid in the month following the month of sale, which means you sell in January, 40% is only received in February. So you sell in January, 25% is received in January and 40% in February. And then they are also saying 30% is paid in the second month following the month of sale. What does that mean? It means sale in January, you are not going to receive this 30% until March. So we are saying you receive 25% in January, 40% in February, and then 30% in March. So it therefore means it's taking you about 3 months to collect money from debtors. They go on to say 5% of the debts are written off in the third month following the month of sale, which simply means if you are selling in January, you collect 25% in January, you collect 40% in February, you collect 30% in March. And the amount that you have not received in these 3 months, when it comes to April, we already know these guys are not going to pay us. So we are going to write it off as bad debts. So that 5% is not going to be collected. It's going to be written off as bad debts. You wait for 3 months, 5% is written off as bad debts. Now, we are given an activity now for us to be in a position to put in what is required. Now, What is expected of us here? We are expected to make sure all the three items that we are having as, you see these question marks? We need to fill in the figures. These question marks needs to be replaced with figures. Now, how do we go about it? Please take note, order is also very important. Please take note, order is also very important. Now, what we need first are the credit sales. Don't try to attempt a question on the data collection schedule with a figure that is missing on credit sales. And please take note, I would love to underline this. Credit sales, not total sales, credit sales. And remember what our question says. 75% of all sales are on credit. And the rest, which we agreed is 25% now, is cash. So this is how we are going to be given the information. They can, one, give us the total sales, which is 100%. And we find 75% of that. Easy. But sometimes they can give us cash sales, which is 25%. And we are expected to find our 75%. Is it doable? Yes. 75 over 25 multiplied by the cash sales will give us the credit ones. Whichever they are going to give us the information, we don't have a problem. And then we can now move forward. Now let's go to this side. The September collections. Please take note. According to the information that we have been given, we are expected to collect in 3 months, which means in September we are collecting for September, which is the month of sale. We are also collecting for the previous 2 months, which are August and July. So in September, we are collecting 3 collections for September and the previous 2 months. Now, this is the easiest way to deal with it, the way I look at it. Now, what percentage is collected in the month of sale? 25%. That's what the question said. 25% is collected in the month of sale. So the month of sale meets with the month of collection here. Where September and September meet, that is where we are going to collect our 25%. So 25% is coming there. And then they are saying 40% is collected in 1 month after the month of sale, which means if we are collecting in September, it should have been sold in the previous month. Sold in August to be collected in September. So it means, therefore, where August and September meets, that's where we are going to have our 40%. Are you following? Check here. We are now starting from the bottom, going up to decide where we are going to have to collect the certain amount. And then we are going to check now. There is a 30% that is going to be collected 2 months after. It means there is a month in between. So if we are collecting in September, it should have been sold before August, which gets us to July. Where July and September meet, that's where we are having a collection of 30%. So there we are. When we are looking into the information that is provided to us, it says 25%, followed by 40%, followed by 30%. But when I'm presenting it here, 30% goes on top, followed by 40% and 25%. That's the order. It goes upside down. So let's see how the calculations are going to come up. The first thing, they are saying there is an extract from our cash budget. And our cash budget is showing us cash sales for August and for September. Remember, we are not worried about the credit sales for September because it's given. But we are worried about the credit sales for the month of August. How much is it? Now, how do we find it? We are given the 21,000, which we know is cash sales, which we already agreed it's going to be 25%. So we are looking for 75%, we are given 25%. Remember, how do we deal with it? It's going to be simply our 75 divided by 25, and we multiply by 21,000. That's how we are going to get our credit sales for the month of August. Hope it makes sense. Now let's go through the questions now. Explain the importance of comparing budgeted figures with actual figures achieved for the same period. Now, it helps us to establish whether the budgeting was realistic. Check in. You are going to say, I am going to spend 2,000 on the telephone for the month in your budget. Comes to the month in question, you spend 5,000 on the telephone. It's either something wrong is happening with the telephone, or your budget is not realistic. You are not being real to yourself. So we want to establish whether our budgeting is realistic. The second thing is to identify trends of mismanagement of cash. So sometimes we budgeted 2,000 and then actually we are spending 1,000. It means our budgeting is not realistic. Or sometimes we are budgeting 2,000, we are spending 5,000 because we are wasteful. So if we are not managing our cash well, we need to identify this by doing a comparison between our projected and our actual figures. We are also doing it so that deviations can be determined and remedial measures will be put in place. We discover that employees are busy making their personal calls during working hours. And because of that, our telephone bill is over the top. What should we do? Do we leave it like that? I don't think so. But those are some of the reasons why we do the comparison. Now, let's deal with this now. Please take note. Because we said the collection is going to be such that 25% here, and then 40% here, and then 30% here. When you add these three, it's 95%. It means we are only going to be able to collect 95% of the amount that our debtors are owing. What happens to the 5%? In the fourth month, we are going to write it off as bad debts. That is an expense that we take to the projected income statement. So it therefore means now, in September, we are writing off bad debts for the month of June. In September, we are writing off bad debts for the month of June. Let it sink. Okay, now let's check. We are now going to calculate the missing amounts for the month of September. Now at least we have got an idea. 30, 40, 25 in that order. Now, determine the amount of bad debts that will appear in the projected income statement for September. I think that one, it's already sorted, it's solved. Because we are told 5% will be written off in the third month, It means something that was bought in July, we are going to allow, in June, we are going to allow July to pass, August to pass, and then September, the third month, then we are going to write off. Right. Now, how much is the figure that is going to appear as bad debt? Simply the 5% of 61,000. 5% of the sales of June will be written off in September. That is the figure for bad debt. Now, let's move on now to the collection. Because we are given that 25% in the same month, I am going to repeat this. 25% here, 40% here, and 30% here, before the 5% that is bad debt. So how are we going to look into the collection for July? Check. Collection for July is 30% of 66,000. Straightforward. And then we are going to get 19,800 as our figure. I'm not going to overemphasize the fact that bad debts is not a collection, but this is the figure that is going to appear as an expense when it comes to the projected income statement. So the first collection is going to be 19,800, straightforward, 30% of 66,000, followed by, we need the August credit sales. If we are given that the cash sales are 21,000, and we know cash is 25%, then we can find the credit sales for that same month. How do we go about it? 21,000 times 75 over 25. It gives us 63,000. So you can see now we are given that information now as it should appear. Now, let's take it now. Remember, in that same month, we are collecting what percentage? We are collecting 40%. Remember, 30, 40, 25. We are now collecting 40%. So 40% of 63,000, we get 25,200. Straightforward. And then we move on to the last month. We are in September, where we are collecting the 25% in the same month. Remember what it says. A quarter in the same month, 25%. So the calculation will appear as 25% of 70,500, and we get 17,625. Check. What do we do now? We are going to add those three collections. I'll repeat, the three collections, because bad debt is not a collection. So we add 19,800 plus 25,200 plus 17,625 to get a total of 62,625. That is the amount we are expecting to collect in the month of September. And this is the amount that goes to the cash budget as collection from debtors or receipts from debtors. That's the expected receipts from our debtor. So you are going to see this should go into our cash budget. Now, let's look into a different activity still on the debtors collection schedule. Now, this says we are provided with information relating to Brocky Traders. The business is owned by Jeremy Brocky. Required. Prepare the debtors collection schedule for November 2021. And then calculate payments to creditors for November, the loan amount for October, as well as the amount for advertising in September. Please take note. The first thing, we are looking into the debtors collection schedule. Let's give our attention to that. Now, the information says, when it comes to sales and cost of sales, credit sales amounts to 70% of total sales. Now, what are they saying silently? They are also saying the rest is cash. So what percentage is cash? Let's check. If 70 is credit, then I can simply say 30% is cash. Now, that is information that you are supposed to give now to the examiner. Like the examiner expects you to be able to deduce that information for whatever you are doing to make sense. Now, the business uses a markup of 60% on cost. Remember what I said. When dealing with this topic, the assumption is cost of sales equals to purchases. And remember, we use markup to calculate what? Cost of sales. Which means we are still going to use the same markup to calculate our purchases. Very important. Because if you get that part correctly, then you are going to see that we are going to be, well, stock is replaced monthly. What they are simply saying is, in January, we are going to sell our stock for January, and before January ends, we replace all the stock that we bought for January, which means there is a link between the sales for January and the cost of sales for January. There is a relationship between the sales for January and the cost of sales for January because stock is replaced in the month of sale. 40% of the goods are bought on credit and the rest for cash. Now, what they are simply saying is, when we are making our purchases, not all goods are being purchased on credit. 40% we are buying on credit and 60% cash. The rest, remember the rest, it becomes what? 60%. The rest is cash. And then they also says, creditors are paid in the month following the purchase of stock, which therefore says, if we are buying stock in January, we are going to make sure that all the credit purchases of stock in January are paid in February. We are just going to buy this month and pay next month for all our credit purchases. We buy this month, we pay next month. We buy in June, we pay in July. We buy in July, we pay in August, just like that. Now, we move on to issue of debtors collections. And remember what I said, this is from our history. History taught us that debtors pay according to the following trends. 35% of the debtors pay their accounts in the month of sale to receive a 5% discount. Oh, now because there is an issue of a discount, we are having more debtors paying us in the first month, in the month of sale, which means you sell in January, 35%, they make sure they try to pay in January to get a 5% discount. 40% pay in the month after sale. Sale in January, they decide to pay in February. They are not going to get a discount, those guys. 20% they pay 2 months after sale, which means they buy in January, they skip February, they decide to pay in March. They are not getting a discount, these guys. And then 5% is being written off. So this is 35%, 40%, and 20%. Let's remember that. 5%, 40%, and 20%. The 5% that is not going to pay us, but we are going to write them off as bad debts because of non-payment. Now, there is also this information. It says, there is an extract from our cash flow statement. Remember, in our cash budget story, we are having receipts and payments. I mean cash budget, not cash flow statement from our cash budget. Now, we have got receipts and we have got payments. Now, they are giving us cash sales there. Why do you think they can give us cash sales? Remember, we might need these cash sales to find our credit saves for a specific month. Maybe. And then, when it comes to the loan item, they are leaving it as a question mark. Remember, in our question, there's somewhere where we are supposed to know how much the loan is. It won't kill us to just say something about it now. There is a relationship between the loan and the interest on loan. So please check this, the loan, the interest on loan. The loan, we got it in October. Before that, there was no loan, so we were not paying interest on loan. But the minute we have got a loan, we start paying interest. There's a relationship between the two. Let's see where it takes us to. Payments to creditors for the month of November, we are going to find that. That is where that information that I said about buying is going to help us. And then there is also a question mark on advertising. So we are going to need this information in us to answer the questions that follows. Like, see, advertising has increased by 9%. So it therefore means we are only seeing October and November. And we know in October it was after the increase of 9%, because the increase only got into effect on 1 October. How much was it before the increase? I think you know. We are going to get that. The interest rate on the loan is 16% per annum. And interest on loan is not capitalized, as this was a loan provided by the owner's wife. In other words, they are saying interest on loan is 16% per annum of the loan. It simply means if we were given the loan amount, we could just find 16% for 1 month and find the interest. But that is missing. Can we be able to work backwards to find it? Yes, it's possible. We are going to do exactly that. Now, let's now work with the information that we are given. The first thing that they wanted us to do is to calculate the figure for credit saves. Credit saves. How do we get to the credit sales? Remember, the question specified to say 70% of all the sales are on credit. And we deduced that 30% is cash. You still remember that, right? 70% is on credit. So it therefore means if we are not given the credit sales for the month of November, we can use the cash sales for the month of November, which is given, to find the credit ones. Straightforward. 70 over 30 times 264,000 gives us 616,000. That is the credit. After that, we are now going to remember the month of sale issue. Where November and November meets, it's here. And what percentage is being received in the month of sale? It's 35%. And they are not ending there. They are going to also get a 5% discount. Let's check here. Let's deal with the 35% to start with. So you can see now the 35% that is in the month of sale always now gets to the last month, followed by the 40%, followed by the 20%. And remember, if we were to calculate bad debts, the 5% would be here for bad debts. Are we still together there? Now, let's deal with the first month, November. So we are going to say 35% of the credit sales, which is 616,000. We multiply by 95%. Why 95%? When the debtors are getting a 5% discount, it means they are paying us less the discount percentage. So what percentage are they paying us? 100% less the 5% discount. So it means they are only going to pay us the 95% of the amount they are owing. So that's the reason why we multiply by 95% here, which means if the discount rate changes, it means the factor that we use here also changes. Let's assume they say they're going to get 7% discount. It means 100 minus 7, we get 93%. So we use 93% here. So that's what we are doing. 35% of 616,000 multiplied by 95%, and we get the 204,820 for the month of November during the first month of sale. During the month of sale. November, where November means the month of sale. And then the other collection should be for the previous month. So in November, we are collecting now for October. What percentage? 40%. So we are going to take our 40% and we multiply by the credit sales figure of 630,000. So it's 40% times 630,000. It gives us 252,000. Straightforward. No discount on that one. So we are just going to take it as it is. And then during the second month after sale, it means now to collect in November, it should have been sold 2 months before November, which means September. September, November, this is 20%. So we say 20% multiplied by the credit sales figure. And then 20% times 910,000, it gives us 182. 3 collections. So we have got 3 figures to deal with here. 3 collections, 3 figures to deal with here. So we add 182,000 plus 252,000 plus 204,820 to get a total of 638,820. That is the figure of expected collections in the month of November. And this is the figure that goes to the cash budget as receipts from debtors. Expected receipts from debtors. Hope everything is still going on as expected. Now, let's check now how are we going to deal with the other missing figures that we are going to deal with. Let's start with the issue of payments to creditors. Payments to creditors. Now, remember what's happening when it comes to this now. We are told that when it comes to our creditors, they are paid in the month following the month of purchase. So if we want to find the payments that we are making in November, we can never look into the purchases of November, but we must look into the purchases of the previous month. We must look into the purchases of the previous month. Now, which one is our previous month? We are looking into October, right? Now, according to the information that we are given now, it says the October sales are 900,000. The sales for October are 900,000. And then we are given the markup. And the markup is 60%. Now, why are they giving us this information? Remember, I said there's a relationship between the sales and the purchases for that month because markup is used always on cost of sales, and cost of sales in this case is equal to our purchases. So we can easily find our purchases using this. How do we go about finding our purchases? It's simply the way we find our cost of sales, which is 100 over 160 times 900,000. Now, this gives us our purchases. But remember, payments is not made on purchases. Payments to creditors, it's not made on purchases, but on credit purchases. What is it that they said about credit purchases? Now, they said here, credit purchases are 40% off the total purchases. So we can simply multiply there by 40% to find our credit purchases. So that's exactly what they did here. And that's how we got our 225. In other words, we could have done it using our cash purchases, which are indicated also, because the cash purchases are indicated, and we know what percentage is the cash purchases. So if we take the cash purchases, which is indicated here, and then we are going to say this is our 60%, because cash is 60%. We are looking for 40%, 40 over 60, multiplied by 337,500. It gives us our credit purchases. Whichever way you use, you'll still get to 225,000 as our figure. Now, let's move on to the loan. They want us to find the loan amount. And I'm saying the loan amount is always linked to the interest on loan. Remember what we always say. They said 16%, so we can safely seek 16 over 100 times the loan times 1 over 12 is equal to the interest, which we are given as how much? As 3,000. So what does that mean? It means the missing amount is the loan. So if we want to find the loan amount, what do? We are going to take 16 over 100 and 1 over 12 onto the other side of the equal sign. They join 3,000. When that happens, what is it going to look like? It's going to be 3,000 times 1 over 12. It's not going to be 1 over 12 anymore. It's going to go upside down, somersault. It becomes 12 over 1. So there it is. And then our 16 over 100, 16% is also going to go somersault as it crosses the equal sign. So it becomes 100 over 16. And then when you do this, it gives you the loan amount of 225,000. Please, guys, you have got calculators at home. Verify the calculations. I might have missed one figure there or the other. I'm still human. To error is human. But the most important thing is, can we get it right? All of us as a group. And then now, the last thing that they wanted us to look into is the amount of advertising. Now, what they are doing with advertising is they are saying, we are not sure of the advertising figure for September, but we know for October and November. And they are saying in October and November, it was 7,630. And this was after a 9% increase. So this is the 100% plus the 9%. That's what we got this, because there is a 9% that have been added. So what are we looking for? We are looking for the 100%. That was before adding interest. We are given 109%. We are given 109%, which is 7,630. We are looking for 100. What we are looking for goes on top. So there it goes. 100 over 109 multiplied by 7,630. And it gives us 7,000. So before the increase, it was 7,000. After the 9% increase, it becomes 7,630. There we are. I think we are still okay. Still happy. Let's continue, boys and girls. Time is running out. Prelims are at the corner there. They are knocking. So we need to go down back to revision. The third question now is looking into the preparation of the creditor's payment schedule. Now, we are given information from Mackay Stores. The incomplete cash budget and information were taken for the financial records of Mackay Stores. We are required to calculate the credit purchases for May 2022 and complete the creditor's payment schedule for the period of 1 May to 30 June. So that's what we are trying to do here. Let's see from the information that is given. So this is what we are given. We are given the sales. Actual sales for March and April and budgeted sales for May and June. Right. Now, it therefore means this information, we got it somewhere between April and May, at the start of May, because we already have the actual figures for March and April. But we are projecting when it comes to the month of May and June. Information B says, credit sales constitutes 60% of the total sales. We already know that cash sales are what percentage? 40%. The business sells goods at cost plus 25% markup. Remember, the markup is coming up. Why? Because we are going to use it to calculate our purchases. Why? Because purchases is equal to cost of sales. 30% of all stock is bought for cash. So when we are buying our stock, 30% is cash and only 70% is on credit. There is the statement. A fixed best method of stock is in use. Stock is replaced in the same month. Remember what I said. When a fixed stock base is being used, it means opening stock equals closing stock. Fixed. When opening stock is equal closing stock, what it simply means, its purchases equals to cost of sales. And stock is replaced in the month of sale, which means there is a relationship between our cost of sales and our sales. So we can easily find the cost of sales by using the sales figure. Very important. Now let's check information C says. Creditors are paid as follows. 40% in the month following the transaction month, which means you are buying in January, you pay in February. And why are you paying that? Because there is a discount that they are giving as our suppliers. So we are trying to take advantage of the discount and we are paying just like that. And then 40% in the second month following the transaction month. So it means if we are going to purchase in January, 60% we pay in February and the 40% we pay in March. We skip a month in between before we pay the 40%. And then the creditor's payment schedule for the period May to June. There it is. But the first thing that you need to be able to do is give us the credit purchases for the month of May. Now, for us to get the credit purchases for the month of May, we need to find the sales for the month of May. Simple. Find the sales for the month of May. How do we find the sales for the month of May? Remember, there's a markup of 25%. So we can say 100 over 125 times the sales for the month of May to find the total purchases for May. But we also remember, not all purchases are on credit. There we are. So we are in the right direction. And then when it comes to the collection now, remember they are saying when goods are bought in May, the first payment is made in the following month. So it means this is where the 60% is going to be collected. And then the 40% is going to be collected here. Simple. The same way we were dealing with the debtor's collection schedule, we are dealing with the creditor's payment schedule. No problem. We are going to get it right. So as long as you know which percentage is being collected when, then we are fine. But remember, when it comes to this 60%, there is a 5% discount. So it means we only have to pay 95%. Very important. Now let's see how it is going to work out. Remember, we are going to have this figure first. How do we go about it? 100 over 125 times the sales figure for the month of May. So remember that, right? We are doing as if we are calculating cost of sales, which is our purchases. And then we remember 75% of all our purchases are on credit. So we now take the 75%. And then that's how we get our 448,000. Straightforward, right? Let's hope we are getting it, boys and girls, the class of 2022. Now, the next thing that happens is we are going now to make a calculation to check how much is being collected. Remember what we said, 60% is being collected here, and then the 40% is being collected here. 60% of 448,000. And then we multiply by 95%. Why? Because there's a 5% discount. It gives us 255,360. We go to the June-April intersection, 40% to be collected there. 40% times the 420,000. 40% times the 420,000. It gives us 168,000. Hey, how many payments are we going to make? 2 payments. One, the month after, and the second one, the second month after. So we are expected to make 2 payments. That's what we are doing. 168,000 and 255,360. We add those 2 figures. It adds up to 423,360. This is the total figure that goes to our cash budget. This is the total figure that goes to our cash budget as payments to our creditors. These are payments to our creditors. So you can see there is not much that takes away the preparation of a debtor's collection schedule from the preparation of a creditor's payment schedule. What you need in both is to know your credit sales or your credit purchases. But when it comes to the credit purchases part, you need to know the relationship that exists between sales and cost of sales, which is the same relationship that exists between sales and purchases. Markup joins the two. Markup weds the two. And then we are good to go when that is done. Everything else, it's just deciding if it's payment being made in the month of purchase or month of sale, then where is the intersection and what percentage goes there? And then the rest can be done from the bottom going up. Now, let's look into the cash budget now. I know we dealt with the cash budget last year when we were in grade 11 and we exhausted everything. But just check, guys, what format does a cash budget? Because we are now going to be interested in interpreting it. We cannot interpret something that we are not aware of, that we are not sure of. So let's look into what a cash budget looks like. The cash budgets have got 2 very distinct parts. The receipts part and the payments part. So we are just breaking down into 2. The receipts. Receipts looks into where is the cash coming from. So in this case, we are saying cash is coming from our cash sales. Cash is coming from collections that we are doing to debtors, as well as from borrowing the loan. So these are our sources of cash during the months given. When we have the 3 sources, we add them. Let's check in September. We add these 3 figures to get our total. In November, we add these three figures to get our total. So wherever we are just adding the three figures of receipts to get our total. So every time you are supposed to have a receipt sections, have items that represents our receipts, and when you add them together, they give you your total receipts. First part of your cash budget. The second part is your payments part. Now, in this case, we are having cash purchases of trading stock, and we also have payments to creditors. Now, we also have loan repayments, interest on loan, rent expense, telephone, among other things that we might have budgeted for. But the most important thing is we are taking all the items that makes up our payments part to find the total. So there we are. Total payments. We can also do the same in October by adding everything until this point, and then we are going to get our total what? Payments. Simple. Two sections. Receipts, payments. Now, remember here, what is the objective? Is to check how much we are expected to receive versus how much we are expected to pay. If you are expected to receive more than payments, it means you are going to have extra, and we call that surplus. So we are now going to say total receipts minus total payments. It gives us either a surplus or a deficit. A surplus arises when we are receiving more, or we are expected to receive more than the payments. Surplus. A deficit results in where we are having less receipts than the payments we have got to make. So if the payments are more than the receipts, then it is a deficit. So whatever we are going to have here in red, it can either be a surplus or a deficit. And then the opening balance is the bank balance when the month starts. Now, let's start with September. This is how we go to September 1st and have a balance, right? So if the balance for September, we add to the surplus that we have made there, we are going to have the closing balance. And then the closing balance for the month of September becomes the opening balance for the month of October. Remember, when we close a month, we open the other one. So what it means is the closing balance for the month of September becomes the opening balance for the month of October. The same applies here. When we close October, we open November. That is very important, because you are going to find a situation in which they are going to ask you the opening balance for November, and from the information that is given, you can't find it. But can you be able to find the closing balance for the month of October? If your answer is yes, those two figures are the same. What are you waiting for? Do the right thing. Now, let's go to the final activity for the day. Now, this is going to look into the preparation of the data collection schedule, which we are now experts at this point, I know. And then we are also going to move into the preparation of the cash budget. In this case, we are given a cash budget with missing figures. And it's going to be our duty to make sure that we patch in those missing figures so that the cash budget is complete in any way. This activity says it's Beige stores. You are provided with information relating to Beige stores for the 2 months ended 30 October 2021. Required. Complete the data collection schedule for the 2 months ending 30 October 2021. And then calculate the figures indicated by 1 to 4 on the incomplete cash budget that is provided. Let's do it. Information now. The first piece of information that we are getting is 70% of all sales are cash, while the remainder is credit. Simple, guys. 30% of our sales are on credit. Now, the business sells goods at cost plus 25% markup. The issue of markup is coming again, 25%. The relationship between cost of sales and purchases. And then we move on to stock is replaced on a monthly basis. They've been saying this. They will continue to say this. And why are they telling us? Because there is a direct relationship between the sales and the purchases for every month. And then they are also saying 60% of all purchases are for cash, the rest on credit. So we know 60% of purchases is cash and 40% is on credit. And then they are also saying creditors are paid in full 1 month after the date of purchases, less 3% discount. So we buy in January, we pay in February, all of it less 5% discount. So that's the way it is. Now, information A, sales. Check here, we are given the sales for the 3 months, August, September, and October. We are budgeting for September and October. So we already know what happened in August. That's why we've got the actual there. But these are our sales figures for the 3 months. Remember, when having sales, we can use it to find cash sales. We can use it to find credit sales. We can also use it to find purchases. And when we know purchases, we can find credit purchases and cash purchases. So you can see sales is our key. When we have sales, we have got the rest. Now, the next information says here, debtors collection schedule for the 2 months ending 31 October 2021. So we start with our credit sales for July. It's given there. And then they are saying here, debtors pay according to the following trend. Check here. 30% in the month of sale to receive a 5% discount. So when I am here, I must know that when I am dealing with September, my 30% is here. When I am dealing with October, my 30% is here. 30% in the month of sale. Where September and September meet, that's the month of sale. Where October and October meet, that's the month of sale. In the month of sale. And remember, there is a discount of 5% there. Straightforward, right? 40% pay in the first month after the month of sale. So we are just going up now. 40% they pay here. And then the other 40% they also pay here. We are now going from the bottom going up. Because the month that follows September, it's October. The month that follows September, it's August. That follows August, it's September. So it means now we are going to be collecting going up. And then 25% pays in the. So it means 25% is going to be expected here, as well as another 25% is here. Oh, if you can get that, then everything else is done and dusted. So what do you need now? Credit saves. Remember, they already told you that certain percentage is cash, another percentage is credit. So given our sales, we can now find our credit sales. So when it comes to July, the credit sales are already given, 204,000. So we are finding 25% of that, and it gives us 204,000. 51,000. That's it. And then we move on. We need to find now the sales for August. This one. You know what we are using, right? And then we need to find the sales for September. Remember, we credit sales for September. It's 30% off 660,000 because this is already given. And then we find our credit. After that, we remember now it is from the bottom going up. Is that okay? It's from the bottom going up. And now this, which is October, which is not showing here, it should be 30%. Here it should be 40%. And here it should be 25%. So we are now going like that. That's the reason why it is 40% of 198,000. We got 79,200. When it comes to October, remember that's the last one. 30% of 210 times 95 over 100 to get 59,850. This is according to the schedule that we are given. Debtors pay according to this format. And then let's go calculate the missing figures now that we are having according to our budget. Now, they're saying here they are missing figures 1, 2, 3, 4, and 5. So we need to calculate this. The first missing figure, it's our cash sales. Missing figure, it's our cash sales. We are given the sales for October. We are told what percentage is cash sales. So what are we waiting for? This is one of the easiest that we are expected to be able to calculate. Now, let's do it this way. Let's use the information that we are given so that we can be in a position to find what we are looking for before maybe we get to the order that information is. Now they are saying here, the rent expense is expected to increase by 8%. Now let's go to the rent expense, which is 5. We don't know the rent expense for September, but we know the rent expense of October after an 8% increase. So it means this figure is already after the increase of 8%, which means it is 108%. Is that making sense? So what are we looking for? Here is the 100 that we are looking for. So I think it's easy now to find it. 100 over 108 times 48,600. That's how we are going to find the figure for rent expense for the month of September. Now let's go to the bottom line information here. Baked stores successfully negotiated for a 540,000 loan with Trinity microlenders at 12% per annum interest. Interest is not capitalized. The loan will be received on 1 October 2021 and is payable in 60 equal monthly installments, which are starting in October. Boys and girls, this one is easy. Now, I told you there is always a relationship between what? The loan and the interest on loan, which is our 4. There is always a relationship between our loan and our interest on loan. This one, I'm not going to do it for you. I'm going to give you 2 minutes to go through it. But please remember, how do we find the interest on loan? They've given you the rate. Can you see that? And they've given you the amount of the loan. Can you see that? And please take note. They are saying it is the interest for October because the loan was received in October and the interest is payable in that month to start with. So can you be able to find the interest on loan? Remember the previous question. We were not finding interest. We were given interest. We wanted to find how much is the amount of the loan. But this time, straightforward. We are looking for the amount of interest on loan. I will never ever overemphasize the fact that this one is for 1 month. Your 2 minutes starts now. Welcome back, boys and girls. I think you got that one right. It's simple, guys. 12% We multiply this by the amount of the loan, 540,000. Just remember it is for 1 month. Our budget is per month. So it is 12% per annum, which means we multiply by 1/12 for 1 month. That's it. Very good. Now, let's also just, before we move on, we get to creditors' payments. Remember what I said when it comes to creditors. There is a relationship between the figure that is given for creditors and the amount for sales. So that is exactly what we are using here. So if we want to find the creditors' payment for October, remember we are paying 1 month after, which means we are interested in the purchases for the month of September because they are the ones that are paid in the month of October. But though we are also interested in that fact, we need to know that we are not interested in the total purchases, but we are interested in the credit purchases only. Very important. So let's just check something here. I want to just take you back one slide so that you can see what I'm trying to drive at. Now, there we are. If we are to look into the credit sales that we are given, now we can use the credit sales in order for us to find the purchases by taking them back to the total sales, and then we can make them credit purchases. So you are going to see now that there is always that link, and that is the one that we are going to capitalize on in order for us to find our payments to creditors. And then when it comes to cash purchases of trading stock, this one is the easier because we are looking into the same month. So what do we need to do? We just use the sales for September to find the purchases for September. And then we are going to use it to find the cash purchases for that month. Straightforward. So let's check how this is going to look like when we check on the answers. Let's start with 1. Now, 1, we are just looking into the figure that we are already given here, the 230,000. Remember, what is this? This is our, remember we are looking for cash sales. And what is it that we are already given? We are given the credit ones. And they are saying 70% is cash and 30% is credit. So we are going to use the credit ones for us to go back to the cash ones. Simple, right? So we are going to say 70 over 30 multiplied by 210,000. And then we get our 490. The other way of doing it is to find the 100%. The 100%, remember, is our total sales for that month. So if we are given our credit ones, we can simply say, how do we find 100? 100 over 30 times the 210,000. And this gives us our 700,000. So this becomes our total sales. So having total sales, now we can find our cash sales by saying cash sales are only 70% of our sales. So it means now we can simply find 70%. But we can also do it the other way. After finding the cash, the total sales, we just subtract the credit ones which we already have. 700,000 minus 210,000, we are still going to get to 490,000. Straightforward. No problem on that. Now, let's move on to number 2. Number 2 was asking us to find cash payments to creditors. Remember that, right? And remember, we are not given any creditors. We don't have creditors. We are given sales instead. And what is it that we did? We said, now let's use our markup to find our purchases. So that's why we are saying the sales multiplied by 100 over 125, because the markup is 25%, you still remember, right? And this only gives us what? Our purchases. This only gives us our purchases. But remember, we are not interested in the purchases or total of it. We are interested in our cash purchases. And according to the information, 60% of our purchases are cash. So that's why we are multiplying by 60%, and we are going to get only the cash purchases. Straightforward. Done and dusted on that one. Number 3 was looking for us to find the payments to creditors in the month of September. And I said, for us to pay in September, we should have bought prior to September, which means we are buying in October because we are always paying 1 month after. So it means now, for us to find the purchases for October, which we are not given, we must link it to the sales for October. When we know how much were the purchases in October, we find the credit purchases in October, and we make ways to pay them in September. So that's the reason why we are still going to use our 660, which are still the sales for October. We multiply by 100 over 125, and I said this gives us our purchases. And then remember, we are not interested only in the purchases, we are interested in the credit purchases. That's the reason why we are saying 40%. In the previous one, we were interested in the credit. In the cash ones, 60% was cash. And now we are interested in the credit ones. So we are taking the 40% now. And then it means that is our credit purchases, which we are supposed to pay in the following month, which is in September. But remember, when we are paying, we are not paying all of it. We are trying to take advantage of a discount that they are offering. And they are giving us a 5% discount. So it therefore means, a 3% discount. So it means we are only paying what percentage? 97%. So that's what we are doing. We are just taking everything and slowly build up to exactly what we are looking for. As long as you know what should be your end result, then you can be in a position to deal with it. But I will never overemphasize the fact that when it comes to this topic, there is always a relationship between your sales and your purchases. When you are given the sales for January, you can use it to find the purchases for January. The link is your markup. Now, when you have that now, you can now be able to find the credit purchases as well as the cash purchases. And if they are asking for a payment to credit purchases, remember, payments are not made for the purchases, credit purchases for this month, but they should be for the previous months. So you work backwards and then you take it from there. And then you can be able to build your answer the correct way. Number 4 was just the interest on loan, which you guys did on your own and you did very well. 12% of 540,000 for 1 month. That's why we are getting 5,400. I know the only mistake that I can expect from that is where someone is just finding 12% and forgetting that 12% is for the whole year. And we are dealing with per month. The last one is the one where we are given the rent expense for the month of September, and we're supposed to find the one for October. So this one, we are just multiplying by 100 over 108 because there is an increase of 8% in the rent. That is how it is supposed to appear. So you can see when we take this now to our incomplete cash budget, this is going to replace the figure for our cash sales, these cash purchases, This number 3 becomes our payments to creditors. Number 4, the interest on loan. And then lastly, the 45,000 for the rent expense. Now, boys and girls, this marks the end of our lesson. Thank you so much for being with me and the rest of the crew in this lesson.